Janet Yellen dismissed the IMF's recommendation to delay rate hike until 2016, but will lift off come in September or December? And how gradual will the pace of tightening be? Stephen Pope joins us down the line to discuss. Stephen, during the first part of her testimony at Capitol Hill and doing all to avoid the headlines, Yellen described vulnerabilities in the US financial system as moderate, though she highlighted notable valuation pressures in the fixed income markets and in the commercial real estate sector. As we heard for the summer, we won't have much data to confirm either way, so could there be frustration in the markets looming?
Yes, I think generally the markets were fairly frustrated through the course of yesterday's testimony, and I guess they're going to remain that way over the summer months, which are thin for volumes. Sentiment is somewhat lethargic. So I imagine that we're probably going to be living on a drip feed from each news item to each key piece of data, and then digesting it, waiting for the next piece of data. So that's how it's going to be. I reckon you just got to summarize that yesterday's statement was a holding pattern. She had to be fairly neutral. She didn't want to give too much away as about the absolute timing of a Fed rate change, because she herself has to be data dependent. But also she was looking to be dollar supportive, not being too controversial. So what we take away from what she said is that the door is open for a rate move in the course of this year. However, I sense that the sentiment in the market is beginning to pivot away from September and more toward December. It's probably saying 33% chance now in September if you look at the Fed Fund futures, and it's shifting towards more of a 66% chance for a December move. So we're probably going to stay at that level pretty much unchanged from where we've been over the last couple of weeks.
Away from the economy, the key point of the day was the alleged disclosure of confidential information about a 2012 meeting of Fed policymakers to a firm that sells analysis and reporting to investors. How do you think she coped with the interrogation?
I think she was actually quite calm under the fire that was coming her way. Clearly this is a tricky issue, because if anyone's been given a advantage in a very sensitive marketplace, then that's not a good thing at all. But I do think there's a question that sometimes these testimonies can be used for the politicians to play to the camera. Now, I know we're 16 months away from the November elections of next year. However, politicians on the Hill are beginning to try and make a name, get the headlines, so they're seen by their constituents as being, an important person in D.C. So I think if you look at the video back of how Representative Sean Duffy really lashed out at her, basically making accusations that she and then the Fed had willfully been hiding documents that had been subpoenaed. I think it was close as one could be to the edge of being totally disrespectful to her as the chair of the Fed and as an individual, and also the Federal Reserve as an institution. One wonders if he would have been that aggressive towards Bernanke or Greenspan had they still been in the place. So I think that she deserves credit for her well-measured response and attempts to try and clearly explain what the duty of the Fed is and how it has to attend to its processes.
The FX impact of Yellen's comments on rates was magnified by the Bank of Canada cut to 50 basis points yesterday. Some say dollar CAD will target the 2009 spike to 130.70, but that may prove the peak of this move. What is your outlook, Stephen?
Oh, I think we could certainly get a little bit of overshoot from that level, because since last June, when the oil price collapsed, I've been watching, not just from June, but from historical perspective, how closely Canadian dollar and the WTI price are linked. And they generally run with a correlation of about 0.92, so a pretty high correlation there. Now, I think that what you're going to do is that with the Iran deal, that's going to put more oil out into the market. The market is already oversupplied. We're going to start to see a gradual increase in what can come from Iran, so that's going to weaken the Canadian dollar. And I think if we just think back to the data that's flowing from the US, you're going to start seeing that the housing sector looks quite strong, and that may be something that she feels a need to cool. So if you start to see strong data in that territory, and if we look at the Home Builders Index, that's up by just shy of 20% on a one-year return compared to the S&P, which is up by 9%. So I think that any data of that type, where we know a quick tweak on the interest rates from the Fed could calm things down a little, that's only going to serve and underline US dollar strength. So I could easily see a push on towards, say, 133.
And so Yellen returns to Capitol Hill today. Can we expect anything more?
The Part 2 always tends to be a bit of an anticlimax. I would say it's going to be more about the data leak, because I think the politicians may have seen there's a chance to do a bit of grandstanding on that, although hopefully not so disrespectful as before. I would imagine she'll be asked some broader questions about how the US dovetails with the rest of the world economy. And so looking at China, is 7% growth accurate, or are the government and the PBOC altering and manipulating the economy and the numbers? Then also the Eurozone, because clearly the fate of the Eurozone is going to be important in seeing how the big transatlantic trade protocol goes through. So I would imagine a slightly more globally rounded tone to today's affair as against yesterday, which was very much US-centric.
Stephen, great to speak with you. Thank you for your insights. Well, another pivotal meeting today is, of course, with the ECB, about which Louise Macaulay will be bringing the very latest. So please do click back for that. Goodbye.